Okay, everyone, we're going to get started. So if you can find a seat. Appreciate everyone coming in today for the open enrollment presentation. My name is Tina Martin. I work in the benefits office, and I'm going to introduce Veronica. She's helping us out. So you may get emails and correspondence from her also. So we're starting our open enrollment in 2019 for your 2020 benefits. So we are going to be doing the open enrollment process in a new system this year, and that will begin at end of this month, which will be late next week, and it's called PlanSource. PlanSource is going to be the one-stop shop for benefits. So you'll be going into PlanSource, and on the end of this presentation, I'll tell you a little more about it, but you'll do all of your benefits selecting or electing in PlanSource. And again, the deadline for benefit changes in PlanSource will be November the 15th. We do have a passive open enrollment, and what that means is all of your core benefits, your health, your dental, your vision, all of those core benefits that you have right now will continue for 2020 if you don't do anything, okay? But if you have the opt-out plan or the flexible spending, health care reimbursement, or dependent care, those plans you must enroll in every year. And again, we're going to go through PlanSource to do that. And the statement for the opt-out is on PlanSource. And so is the healthcare reimbursement election will be right there on PlanSource too. So what we need for everyone to do is evaluate your benefit package. Look at who you have covered on each benefit. Because remember, your benefits are all separate. So you can have your family covered on the health insurance, but only have yourself covered on dental. And so that's fine. You want to look at all of those coverages and make sure that that's what you want going into 2020. The one time you can do change benefits is during open enrollment. And again, if you have a qualifying event throughout the year, a qualifying event would be a marriage, a divorce, if you have a child, or if you gain custody of a child, that kind of thing. And qualifying events we will be doing as of January in PlanSource also. But with that, you have to do that, make that election within 30 days. 30 days of the event. And when you do elections for qualifying events, then you must provide proof of dependency. So if you get married, we'll need the marriage certificate. If you get divorced, we need that also. If you have a child, we're going to ask for the birth certificate, and we also need the Social Security number. Those are things that we must have. So who is eligible for benefits? And that would be any child that you have legal custody of, your child or stepchild. Those children can stay on your health, dental, and vision, which is the core benefits, through the age of 26. There's no qualifiers with that. And what I mean by that is that if your child is 26 and they don't have to live with you, they do not have to be unmarried, they can be married, they can have children, they can be working somewhere, it doesn't matter. The only qualifier is their age, and they stay on your plan through the end of the year in which they turn 26. Any questions about that? Now, I will say there's one exception to that, and that is the life insurance. If you have supplemental life on your dependent child, the supplemental life will end on their 26th birthday. We will conduct an audit on dependents to make sure that they're eligible for the coverage, and so we may ask for birth certificates or marriage licenses as we do these audits. We have a few changes, but I was told from Florida Blue, you will not receive a new ID card or member ID card from Florida Blue. You will not have to receive one. So even if you change plans, your ID card will still work 1-1, and it'll be programmed in. So it's still the same member ID number and the same card. So the plan changes that we have this year, there's a couple, and the high deductible HSA plans Right now, they're the 1168 and the 1169 plan. Those plan changes, the plan names will change. And the new plan for the 1168, which is the single coverage under the high deductible plan, is 05168. And if you have family on your plan, one dependent or more, then it becomes the family plan under the HSA plan, and the new plan is 05169. The other change I want to mention is there is an increase to the HSA contribution. If you're in the HSA high deductible plan, you receive, right now you would have received $600 this year, but in 2020 the contribution from the county is going to be $630, and that is because it will handle or cover the administrative cost on the plan. So you yourself would be paying that. It would come out of your account, and that's why the county has decided to do the $630 going forward. There are two changes to our medical plans, and the 3559 plan, you may know that by the 1552 plan. It is now the 3559 plan. It is the richest plan that we have. The specialist copay is going to go from $30 to $50. And the rate for that plan only did go up. It went up 8% on that plan. And the reason why the rate went up on that plan only is because the plans that we have, we look at how they rate throughout the year. And basically, the 3359 or 1352 plan and the HSA plans, they cost about $600, a little over per year, per person per year. But, I'm sorry, per person per month. But on the 3559 plan, the richer plan, the cost for that is over $1,400 per month. So we're trying to level out the plans, and that's why that increase. So we have had people say, well, you know, you're going up on the plan 8%, but I only got a 3% raise. Well, the 3% raise, if you calculate it on $10 an hour, 30 cents times the 2080 hours, is $624 for the year. The family premium on the 3559 plan is the most expensive plan that we have, and with that plan going up 8%, that amount is $450.60. So that is a difference there, and so you would see a raise even though the plan did go up. The differences between the plans, the 3359 plan, it has not changed. So when you go to your primary physician, it's a $20 copay. When you go to the specialist under this plan, it is calendar year deductible and then the co-insurance, which is 20%. And you would pay the specialist their allowed amount contracted with Florida Blue up to your deductible and then 20%. And remember, all of that goes toward the maximum out-of-pocket for the year. And then on the richer plan, the 3559 plan, it is a $50 copay to specialists in 2020. There's a difference in the hospitalization by $250 between the two plans, and the hospitalization is per admission, not per day, but per admission. And the deductible is different. It is for the 3359 plan, it is $1,000 per person, up to $3,000 for the family, and for the 3559 plan, it's $750 deductible, up to the $3,250 per family. Oh, I'm sorry, $2,250 per family, up to $6,750. Okay. Any questions about that? Okay, I talked about the opt-out. The opt-out plan is something that you must enroll in every year, and the opt-out plan is the plan that you can be in to earn $200 per month on your paycheck, $100 per paycheck, if you're opting out of the county's health insurance and if you have health insurance somewhere else. Maybe you're on your spouse's plan. So with that, we do require that you answer a couple of questions in PlanSource, and the survey questions are, do you or if you're on TRICARE or if you're Medicare eligible, then you would not be able to enroll in the opt-out plan. And again, you'll enroll in this every year. So if you're in it this year, you do have to go into the system and you must enroll in the opt-out plan. And it will also say that you need to upload your current health insurance card for validation of the plan. That'll all be done through PlanSource. Let's see, I think I hit on all that. Any questions about the opt-out? Hopefully you know about our employee health clinic. It's on Balin Street. We have Dr. Espenscheid and Vince Wright, and Garnett's our nurse manager, and several medical assistants in there. I think the clinic for me has been one of the best things that's happened for me and my family that the county has done. Remember, the clinic would prefer you make appointments because we do have a lot of employees trying to go. If you can't make an appointment, of course you can go in and be a walk-in. You might just have to wait a little bit longer, but the wait time for the clinic is a quarter of my wait time when I go to my doctor. And they can get me in really, really quick. And so remember, on the health clinic, if you take our 2 PPO plans, the 3359 or the 3559 plan, you and your dependents that are covered on that plan can go to our clinic free. They do ask that the child be over 3 years of age. They won't see little ones, but remember that. Now, if you're on our HSA plan, the high deductible plan, you do have a $20 copay when you go to the clinic. And then if you don't have our plan, maybe you're just opting out of our plan altogether, you can use the clinic, but we do need information on you and your dependents. And that information will be fed into the clinic system, so when you show up, they know who you are and if you have a copay or not. So with that, you would also have a $20 copay if you have insurance elsewhere. And there's a form to fill out, and you can contact us for that form. And the other thing I do want to mention on this slide is the employee health clinic. Their policy is that they're going to ask you for your current health insurance card every time you go in there. I talk to the clinic 3, 4, 5 times a day sometimes. They know me, but they still ask me every time I walk in for my health insurance card. So that is their policy. The next couple slides, dental and vision, we have not made any changes to either of those plans. The plans remain the same, and the cost for the plans remain the same. Our life insurance is through Lincoln Life Insurance, and everyone that is a full-time employee has $40,000 in life insurance that the county pays, of basic life insurance and accidental death and dismemberment. So if you are in the opt-out plan, if you're eligible and you're enrolled in the opt-out plan, then you get an additional $10,000 that you don't pay for, additional to your basic, so that would be $50,000. And our retirees, when they retire, they do get $5,000 of life insurance paid by the county. With the life insurance, there are a couple of updates that I want to make you aware of. Supplemental child life is $20,000 per eligible child, and that is $2 per month. The $2 is per month. It doesn't matter how many children you have on the plan. It's still $20,000 for $2 a month. And again, remember, it goes through the date of their 26th birthday. So this is a good time to evaluate your supplemental life insurance to make sure that your child who is 30 now, you're not paying a premium for that you shouldn't be paying, okay? Evidence of insurability will be required if you come on to supplemental life first time, and if you want to change that, evidence of insurability may be required. And those evidence of insurability forms, they are right there on the page with life insurance, so you just click on that PDF file and fill it out, and then you would send it in to us, okay? And with that evidence of insurability, we send it to Lincoln, and Lincoln will decide if you're eligible to be covered or not, and we will let you know. You don't pay for that until that comes back, okay? If you have supplemental life right now on yourself, then you can get supplemental life on your dependents. The dependent supplemental life gives you $2,000 for each child and $5,000 for your spouse, and it's $1.49 per month. That's called the dependent life. It's a set amount. Doesn't matter how many children you have on there. Set amount. But you must have at least $10,000 supplemental life on yourself as the employee to be eligible to elect that dependent coverage. The spouse coverage, you can get up to $30,000 without an evidence of insurability, but you will, again, need to have at least $10,000 on yourself. Evidence of insurability, we will let you know for sure about if you need that or not, but it's always a good thing to just print it off and do it if you're upping your insurance. Okay? Any questions about that? And I will say, if you have supplemental dependent coverage right now, the spouse or the child dependent coverage or the dependent 149 coverage, and you do not have supplemental life on yourself, that coverage will end as of the end of the year, and the contract says you must have the supplemental life on yourself of $10,000 or more. And we'll be glad to answer any questions or help you with that if you're not sure about it. Our voluntary long-term disability, there are four options, and that has not changed. We have made no changes to the plan nor the cost of the plan. The cost of the plan is based on your monthly income. And your monthly income, then you multiply that by the formula for LTD, and normally it's around $5 or $6 to maybe $7 or $8 per month. And that would come out of your, once a month out of your check. Okay, and there may be a beneficiary required with that if you're just enrolling for the first time. Yes, ma'am. Yes. She asked if that was also in PlanSource, and yes, it is. It is in PlanSource, and PlanSource will alert you that you need to fill out the evidence of insurability. Any other questions about that? Our healthcare reimbursement plan, I'm going to turn the mic over to Kenny. He will talk about healthcare reimbursement.
Good deal. Thanks, Tina. Good morning. I'm Kenny Anderson. I work with Lockard & Williams Insurance Services. They're located in Pascagoula, Mississippi. I live in Pensacola. I've lived here all my life. Been working with the county for about 8 years now on your flexible spending account plan. How many of y'all participate in that? Got a lot of people. There's about 440 people in the plan that right now. There's in the dependent care account, there's 14 people doing that. The healthcare reimbursement account, that's the plan where during open enrollment you can make an election to be able to set money aside next year to pay for the things that the insurance doesn't cover, your deductible, your co-pays, co-insurance. The benefit is the money you're setting aside is being taken out of your check out of your paycheck on a pre-tax basis. You know, right now, if you're not doing flex spending, and let's say you take a monthly medication, you're on blood pressure medicine, you pick it up once a month at Walgreens, you're not doing flex and you're on your way home tonight and you're going to stop at Walgreens to get your medicine, you're in the pharmacy and they say, here's your blood pressure medicine, that'll be $70. Chances are you had to have grossed $100 to have cleared $70 because your income is taxable. With these plans, you save the tax dollars. That's what it's all about. The money you set aside can be used for your expenses, your spouse, your dependent children. You can use it for your kids until the year in which they turn 27. They don't have to be your tax dependent any longer. You could have a 25-year-old married with her own family living in California. If she's not 27, you can still use your flex money for that person. The individuals don't have to be covered under the insurance through the county either. You don't have to have health insurance through the county to do the flex plan. You have to be a full-time employee. If you meet that criteria, you can be in this plan. You know, the hardest part about doing flex spending, and I've been doing this for 26 years, I participate also, the hardest part about doing this is what you have to do, and that's make the election. You know, remember you're setting money aside for out-of-pocket medical, dental, vision services, prescription medications. On the medical side, that would be trips to the doctor, your specialist, your family practice, hospital services, emergency room, urgent care, chiropractic services, just about any medical thing you can think of. On the vision side, it's your eye exam, the purchase of prescription glasses, prescription sunglasses, contact lenses, LASIK eye surgery, dental services, anything you can think of, cleanings, crowns, bridges, extractions, root canals, orthodontia. That's still the biggest dollar expense that people set money aside for. You know, you may have insurance, you may have medical insurance, you may have vision, you may have dental. You know, I tell people the perfect scenario is the insurance pays 100% of everything we do. It doesn't work that way. Chances are if you incur any expenses, it's going to cost you something. You're able to pay for that on a pre-tax basis. The maximum you can do for next year is $2,700. The IRS is probably going to bump that up, but it's not going to be before open enrollment closes. So we have to go with $2,700 for next year. You can do anything less than that, but you do have to re-sign up for this every year. If you're doing flex spending, if you don't log in and make a new election, you will not be in it. The software is going to calculate the per pay amount for you automatically. You put in your number not to exceed $2,700. It's going to divide it by 24 paydays. The 2 months of the year where you get 3 pays, they don't take it out of the third pay, so it comes out 24 times. For example, I want to do $2,400 next year. That's going to be $100 per payday, right? $100 each month, twice a month for the whole year. The benefit is that $100 is coming out of my check before payroll taxes my income. So that $100 is not subject to federal tax or FICA taxes. That's a good thing. And at the end of the year, it's actually reduced off my W-2. It doesn't catch up to you. That's a great thing. The only other way to get a tax break on these types of expenses is when you file your federal tax return, you can still itemize. Good luck with that. Most people never have enough in expenses to truly get the tax break until this year, 2019, when you attempted to itemize. The first thing that had to happen is your out-of-pocket expenses had to equal at least 7.5% of your adjusted gross income. Most people never have enough to get to 7.5%. That's the first thing. This year it changed though. In 2019 it changed. It went to 10%. The IRS made it even harder, made it higher. In 2002, my wife had her third open heart surgery at UAB in Birmingham. She was in the hospital almost 3 months. Her hospital bill alone was a little over $2.1 million. And I'm not lying. And I always ask people, do you think I had enough to itemize that year? And the answer is no, because the Blue Cross plan I had at that time, my maximum out-of-pocket was only $1,800. After I paid $1,800, Blue Cross paid 100%. This is the way to go if you've got expenses. Does that make sense so far? None of this is new. Okay, so primary benefit is pre-tax. There's a really big secondary benefit with the flexible spending account, and it's a rule that the IRS has, and it's a good rule. The IRS says if you elect to participate in flex spending, the medical reimbursement account, for however much money you elect, all of your money is available to you day one. Doesn't matter how much money has come out of your check yet. Okay, let's say I work for BCC, and the only thing going on in my family is I've got a dental issue. Okay, I've got a dental issue, I've got a tooth, I've got some dental stuff that's been killing me. I'm afraid to go to the dentist, but I'm finally going to man up, and I've got my appointment scheduled. They can get me in on January 3rd. That's a good thing. They can't get me in before then. They can get me in on January 3rd. They called and scheduled the appointment. They also told me, look, Kenny, we've already called and verified your dental coverage. We know what the insurance is going to pay. We know what you're going to owe. And they're going to do that. You know they're going to do that before you ever go see them. Your part that day on the 3rd, this is some pretty extensive dental work, your part's going to be $2,400. Have your checkbook ready, because we want to be paid in full. Okay, well, you know what? I'm going to do this through the flexible spending account. I'm going to elect $2,400 for the year, divide that by 24 pays, $100 a payday. I'm going to get my Take Care card in the mail. How many of y'all have this card? Okay, really good news. Federal banking regulations state next year this will be the actual size of the card. Most of you will have to get bigger purses. It never gets old. It's a great joke. Okay, because I've elected $2,400, all of my money is on my card the first day of the plan year. So when I have that dental work done on the 3rd of January and I go to leave the office, pull out my card, swipe it, pay it in full. I haven't even been paid the first time yet from the county. I haven't received my first paycheck in January. When I do get paid that first time, how much money will they take out of my check? Just $100. They're not going to play catch up and take it all out. That's against the law. 2 weeks later, another $100. By the end of the year, they've taken $2,400. I've spent $2,400. Now, what if I really had a procedure coming up, and I didn't want to do this, and I didn't have the cash flow, I didn't have the money in savings or checking to pay for it, but I've got to get it done? What my options? I guess I could go to a bank or a credit union, and I could borrow the money. There's no tax savings doing that, and you're going to pay an interest rate. Or I could charge it on a major credit card. There's no tax savings there either. And am I disciplined enough to pay off that credit card in full at the end of the month? If I'm not, it's just going to build up interest, interest, interest. Interest-free loan plus the tax break. Does that make sense? Okay. Let's talk about another rule the IRS has, though, and this is the rule that's a scary rule. Now, you know, the hardest part about doing this, and I've done this for 26 years, and I participate also. In December, it'll be my open enrollment, and I've got to make my election for next year. How much money do I want to do? The hardest part about doing this is making the election. How much do you set aside? You've got to do the work. People ask me all the time, how much do you think I should set aside? How much should I do? I don't know what's going on in your family. I have no idea. I tell people, think about, you know, in your household, what are your fixed expenses? What are the things that you know are going to take place? That's what I do. In my household, it's medicine, maintenance medications. My wife takes a lot of medicine. How often do we go to the doctor? Are we going to meet our deductible next year? Do we have a procedure already scheduled? Is next year the year we get new glasses, eye exam? Is there any dental work coming up next year? The last thing you want to do is put too much money into the plan. Now remember, at the end of this, I'm going to contradict myself greatly on what I'm fixing to tell you. Okay? The IRS says for however much money you elect for the year, you've got to have enough in expenses in order to get all your money back. However much money I elect, I've got to have enough in expenses to get all that money back. What they're really saying is, if you don't use it, you what? There's a use it or lose it rule. Okay? It's not the county's rule. It's not Lockard & Williams' rule. It falls under Section 125 of the Internal Revenue Code. If you leave money on the table, you could lose money if you've got too much money in the plan. If you leave money on the table, where does that money go? It stays with the county. It stays with whoever you work for. In your case, Board of County Commissioners, they keep your money. Okay? It's not their rule to keep your money. That's how it works. If you work for the City of Pensacola, it stays with the city. If you work for Penair Federal, it stays with Penair. It stays with your employer. I did $2,400 this year at Lockard & Williams. At the end of this year, if I've got $300 left over, use it or lose it from me too. My money, I'd lose my money, and it would stay with my employer, Lockard & Williams. John Lockard and Jim Williams would keep my money. I'll go out and break my ankle if I have to incur the expense to get my money back. I don't want to lose any money, neither do you, right? Here's the contradiction though. About 6 years ago, the IRS said companies could amend their plans. They could change their plans to allow for a rollover provision. Escambia County did it the first year. They immediately said, we want the rollover. With your plan now, once the plan year ends, should you have any money left over, your balance is $500 or less, it's going to roll over to the next year automatically. There's nothing you have to do. $500 or less will roll over automatically. And the rollover amount does not go toward the annual amount. So for next year, you can sign up for $2,700. You could also have $500 roll over on top of that. Okay, does that make sense? At the end of 2020, you could have $500 roll over again. It's pretty simple. Greatly reduces the chances of you losing money. You could still lose money though. Trust me, you could still lose money. Is this planned for everybody? No. You know, and I've been doing, yesterday I was at Okaloosa Gas District in Niceville, then I was at Okaloosa Schools, and I was here at Escambia County, so I'm seeing a lot of people. I've had some really young employees come up to me and they'll say, I'm single, I don't ever go to the doctor, I don't take any medication, I don't wear glasses, I don't have any dental work coming up, I'm thinking about doing $1,000. And it's like, you just told me all the things I need to hear to tell, so I can tell you, you don't need to be in this plan. That's a good thing. It's a good thing if you're not in this plan. You're healthy. You'll get old sooner or later and things will start happening in your life and you will have expenses. I max out on this every year. I max it out every year because of my wife's expenses. If it was just me, I would probably do $300 or $400 every third or fourth year because I don't take any meds usually unless I get sick, the crud, but I do wear prescription glasses. And I get new glasses about every 3 or 4 years, and I'm cheap. I don't get the real expensive ones, so that's why I do it. Does all that make sense so far? Let's talk about, I hadn't talked about this in the other meetings, over-the-counter medications. It used to be, before January 1 of 2011, you could have used your flex money for OTC items too. Most aspirin, Tylenol, Benadryl, NyQuil. Because of the Affordable Care Act, January 1/11, the IRS changed the rules on that, and they said for most over-the-counter items, the debit card should not work. Okay, it's going to kick it out. You can be reimbursed for those things, though. You have to send a paper claim. To me, you have to send the receipt for the OTC item along with a prescription from the physician recommending you take the over-the-counter item. Some people do it. I see it. I've talked to a lot of employees since 2011 where they've said, my doctor won't do it. My doctor won't write it. And I've talked to a lot of employees that have said, yeah, my doctor did it, no problem at all. I see a lot of it coming in. Yes, ma'am. Yeah, you can do it online. Yeah, if you go to the website, myflexonline.com, you can, it's pretty simple. We've got a mobile app also. You know, log into that, check your balance. The one thing about this card too is if you ever try to swipe it for more money than you've got on it, it's going to kick it out. So if you're at Walgreens or somewhere and you swipe it and it doesn't go through and the person behind the counter says you must be out of money, they have no way of knowing that. They're guessing. And I've got a report with me I printed yesterday. I can tell you what your balance is as of yesterday. But again, with OTC items, you know, ask for the prescription. The first week of August of this year, I was in the Santa Rosa County Jail. I was doing enrollments. I wasn't arrested. And I had a corrections officer pull me off to the side, and she said, I need to ask you something about OTC. I said, sure. She goes, it's personal. I said, I'm not telling you her name. And she goes, my husband has a condition, and I need to know if adult diapers are covered. I said, depends. So it's hard to come up with this stuff, I'm telling you. Okay. All right, let's talk about dependent care. The county has 14 people doing daycare. Is anybody in this room doing the daycare account? If you are, you've got to re-sign up for that also. Make sure you re-sign up for the medical flex spending. If you don't re-sign, you will not be in the plan. Dependent care is typically where you can set aside up to $5,000 if you're married filing a joint return to pay for your daycare services. It can be before school care, after school care, all-day nursery care. It's for children up through the age of 12. Once your child turns 13, you don't get a tax break on it any longer unless the child is disabled. Where the daycare is being done at, it can be a company, that's all they do is daycare. It could be a church, it could be a school, but it could also be an individual. If you've got a friend, a lady down the street's retired, she's really good with your 2-year-old, you trust her, you can pay her. It's not a problem. Your mom or dad are going to watch your children for you. You're going to pay them, not a problem. What it can't be would be your own dependent child watching your own dependent child. Okay? Imagine you have an 18-year-old and a 2-year-old. God forbid that. That wouldn't qualify. Okay? It could be your next door neighbor's 14-year-old watching your 2-year-old if you trust her, but not your own child watching your own child. The big difference between the two is dependent care is not pre-funded. Remember on the medical, I had $2,400 worth of dental work coming up. How much did I have on day one? $2,400. With daycare, the maximum you can ever get back is equal to how much has come out of your check. It's not available until you get paid. Then the money comes out. It's available. The debit card is difficult to use for daycare. It's difficult because, number one, your daycare provider's got to have if it's an individual, they probably don't have a Visa swiping machine on their TV. So they'd have to have the ability to accept credit cards. And then it's a timing issue. If I don't get paid on Friday, if I get paid Friday and that's when the money comes out and I'm trying to pay them Monday morning, the money's not on the card. So it's a timing issue. Most people with the county that do daycare, you can call me, we can talk about it, I can get you set up to where you get a reimbursement check. You have buckets of money. Using the card is one way to empty the bucket. The other way is if you file a paper claim, we can cut you a reimbursement check. I deliver checks to Lorraine in finance on the 1st and 15th of each month. So, if that's the way you want to go, you can go also. At Lockard & Williams, even though I do this for a living, we don't have the card. Okay, we don't actually have the card for ourselves. I don't have this card, yet I do this for a living. They're too cheap to pay for it. So I wouldn't use it anyway because I like to save all of my receipts up and file it all at one time and get a check back. For this year, 2019, I had over $2,400 worth of expenses by the end of April already. I had already had enough to where I could get all my money out, but I haven't done that yet. I'm going to get all my money out next month around the 3rd week of November. I'm going to submit a paper claim and get a $2,400 check back. Why do I wait till November? I use it for Christmas money. That's what I like to do. So it's your preference, whatever you want to do. Going back to daycare, daycare is not just child care. It could be adult care. In your household, if you've got an elderly person living with you, your parents, an in-law living with you, because of their health, you have to have somebody come in and watch them during the day. That's adult care, and that qualifies under the dependent care account. You can set aside up to $5,000 if you're married filing a joint return. My wife's dad's 85 years old. He lives with me and my wife. He's a good guy, retired lieutenant commander, 3 tours of Vietnam. If his health ever got to the point to where we had to have somebody watch him, I could set aside up to $5,000 to pay for that. It's a lot of tax savings there, but I'd have to be claiming him as an exemption when I file my taxes, and I'll never do that. I'll never claim him as an exemption. My wife's on disability, so they kind of take care of each other during the day, planning my demise while I'm at work. Okay? Do you have to do anything if you want to continue to do flex spending? Yes, right? Because we get calls on this every year, February, March, April. Somebody will call and say, my flex money is not on my card. Did you re-sign up? You've got to re-sign up. Look at your pay stub in January and see if the money's coming out. If it's not, get with John or Tina right away. We can fix it. You call us in March or April, it's too late. There's nothing we can do. Just a couple of cost-saving tips, things that have happened with me this year. If you're seeing a specialist and he writes you a brand new prescription for something you've never taken before, I'm willing to bet chances are it's going to be pretty expensive. Go online, Google the name of the drug, the manufacturer. You can still find online coupons that can save you money. There's not as many of them out there anymore, but they're still out there. Do that. We've had to go to UAB 5 times this year, me and my wife, for stuff going on with her. We've been to the Mayo Clinic 4 times. One of the trips to UAB in Birmingham, specialist wrote this new prescription, and of course my insurance was denying it. And the irony of it all is I have Blue Cross of Alabama, And my company is owned by Blue Cross of Alabama. So my employer, which is my insurance company, is denying my wife's medication. So the doctor was fighting with Blue Cross. And finally, on a Saturday, my wife said, it's been approved, you can go pick it up. We get all of our medicine at Sam's Club here in Pensacola. So where I live here. I said, I'll go to Sam's and pick it up. She said, well, thought I'd let you know, this one prescription is $780. I said, you have got to be kidding me. She goes, no. She goes, but that's for a 3-month supply. If you just want to get 1 month, we can do that. And I said, no, I'd rather cry one time, get it over with, because if they deny it again next month, we're going to have to go through this garbage, and I don't have time. So I go to Sam's in Pensacola. They don't have it. We don't have this drug in stock, and it's going to be 5 days before we can get it, okay? I said, how about calling the Sam's over there toward Daphne, halfway to Mobile? There's that outlet mall. There's a Sam's Club south of the interstate. They called. They got it. 35-minute drive. I said, I'll drive over there to pick it up. So I get over to Sam's in Daphne. I was lucky there was nobody at the pharmacy. I was the only customer, so I walked up and said, hey, my wife's Joanne Anderson. Sam's in Pensacola was supposed to call. And they knew I was coming. They said, we got the medicine here. Pharmacist walked up to me and said, hey, man, do you ever Google the name of these drugs to see if there's a discount coupon? I said, I talk about it, and I forgot to do it with this one. He said, you really need to Google this drug and see if there's a discount. I had my phone with me, but I didn't have my reading glasses. I'm blind. I couldn't see my phone, basically. I said, I can't see anything. Will you do it for me? I gave him my iPhone, and he downloaded the coupon for me. And it was really cool. It went from $780 for 3 months to $72 for 3 months. Plus, he got me 3 refills for the whole year. So if he hadn't have brought that up, $780 for 3 months times 4 times for a year is $3,120. Instead, I'll pay $72 times 4 times, $288. I swear, true story. I said, you tell me who I can call at your corporate office right now to tell them what you just did. I'll do it in front of you. I want to do that for you. He said, no, you don't have to do that. Don't worry about it. I called my wife and I said, hey, what do we need at Sam's Club? Do we need dog food, toilet paper? I said, I got a ton of money. We can shop. I'm not kidding you. I'm not kidding you. That's a true story. The other thing too is if you take if you're taking a generic medication and it's rather expensive, ask the pharmacist what the brand name drug would cost. You know, you'd be surprised. Now I've said this before in this meeting. This happened about 4 years ago. I hardly ever get sick, very rarely. But my daughter is an RN at Baptist Hospital. She's a manager. She's a charge nurse in surgery post-op. My wife goes to Baptist. Her cardiologist is there. So I hear it all the time. If I do get something, the crud, I can hear Katie, my daughter, Dad, you need to come to Baptist, come to Baptist. And my wife's on my case too. Go to Baptist, go to Baptist, go to Baptist. I do not want to go to Baptist Hospital because I know what my daughter's going to do, and that's look up my medical records, and that's a HIPAA violation, and I would have to sue her. I don't want to get into litigation with my own child. Okay? I wouldn't sue her, but I know that's what she's going to do. She says no, but I know her too well. So I go to the medical center clinic, and they're a client of mine anyway. So I had a problem about 4 years ago with my foot. I had to go see a specialist. My wife went with me. They said, where do you get your meds at? I said, Sam's Club. We get all of her stuff at Sam's. So he wrote out the scripts. We go to Sam's over on the airport, get to the pharmacy window, tell them who I am, date of birth. I asked them how long. They said it'd be about 30 minutes. So Joanne, my wife, she said, let's go to TGI Fridays right in front of Sam's and eat. And I said, no. They had a lot of free samples that day everywhere. There was everywhere. I said, let's just walk around. You know, maybe they'll give us a tray. You never know. So we get about 15 yards from the pharmacy window, and the pharmacy tech called me back. She goes, Mr. Anderson, come back here. She goes, look, this one prescription you're getting, just thought I'd let you know ahead of time, it's $400. And I said, you've got to be kidding me. And my wife's standing there. She goes, you're going to take it, Kenny, because she knows I'm a cheapskate. She goes, you're going to pay for it. You're going to take that medication. You're going to enjoy it, in fact. And I said, God, oh, man, this is horrible. I said, don't you have a generic? And she said, that is the generic, $400. I don't know if you go to Sam's Club Pharmacy, but Derek is the guy that works there. He's the manager. He was working that day, and he said, hold on a second, let me check something. He gets online, then he comes to the window. He says, look, here's the deal. The generic is $400, but the brand name drug is only $35. Isn't that wrong? I mean, that's messed up. He said, the brand is $35. I don't have it, but I can get that one here by tomorrow after 5. He goes, what do you want to do? I said, what do you think? You know, I'm going to have lunch in Sam's again tomorrow. So, you know, if I hadn't asked that question, I would have paid the $400. So ask some questions. You know, try to keep your health costs down. That keeps the plan's costs down, keeps your rates down. You guys had a little bit of a rate increase. Okaloosa County, I do their work, 23% rate increase. Yeah, very upset employees. over there. I'm not the insurance agent, though. That's not what I do. Any questions? Thank y'all.
Okay, thank you, Kenny. We do have other providers in the back, and I want to just mention who they are. We have Holly and Alice from Aflac. We had Wayne from Colonial. We have Sherry from Florida Blue, Rebecca from Legal Shield, and Georgette from Humana Vision. So make sure you do talk to them and see what they offer, and all of those you can do payroll deductions. So make sure you do talk to them before you leave. So the next steps that you will need to do or think about when open enrollment begins is look at your plans. If you're going to enroll, if you compare plans and you decide you're going to enroll in the HSA, the high deductible plan, and I will say if you do the math, you can't beat an HSA on paper, but you have to do the math and see what works for you. And HSA, I do ask, do the math. You're going to see that you'll have some savings, and then also do some homework. The allowed amount for your doctor primary care, you can call and ask them, or ask the primary care physician how much that would cost for you to go. You can also call, if you have a specialist you use, how much that would cost, the allowed amount, the contract amount between Florida Blue and that provider. And then the other thing is call your pharmacy and ask them also, what if I go into a high deductible plan, what would the allowed amount be for medication? You may be surprised. What we pay $30 copay for on the PPO plans could be $600 or $700 for the allowed amount for the medicine. So if you do some homework, you know up front what you're looking at. But if you do sign up for the HSA plan for the first time, you will need to fill out an HSA bank application. The bank is where the county would put the $630 in the account for you to help offset that deductible. So I just wanted to make sure that you were aware of that you will need an HSA bank application. If you're already in the high deductible plan, the HSA, you already have a bank account established with HSA Bank, then you don't need to fill out that additional form. Any questions on that? Okay, so remember our premiums are prepaid. That means our premiums for January the 1st will come out of the December check. And the first check in December, I think, is December 13th. So you need to look at that check and evaluate it for your health, dental, and any life insurance that you have on that first check of December. Your vision care will come out of the second check of December. So those deductions pay for the changes that you've made for January 1 effective date. So we do ask that we ask that you please look at your check information. It's a lot easier for you to look at your individual check information than it would be for me to look at over 2,000. Yes, ma'am. The FSA, healthcare and dependent care, will come out, and the opt-out program will be paid in the LTD. All of those things come on the first check of January. So you need to really review your December checks and your January checks to make sure that everything you've done is correct. We ask if you have any questions or concerns, let us know right away. We need to fix it right away, and we can, but there will be a deadline for changes. We won't be able to fix things after that deadline. So we work closely with payroll. We want to make sure that everything's correct in December and January. And like they said, don't drag that on to February, because we're going to have a set deadline for that. Let's see. So in PlanSource, I mentioned that what you need to do. We're going to be giving you login information, username and password information, where to go. The good thing about PlanSource, you're going to be able to access it from work, home, or your phone. It's not just work anymore. Okay, so you can do it whatever time of the night. You can have your spouse helping you with it. So that plan that system, will be the place you go, the only place you go for benefits open enrollment. So the first thing when you go in there and get started, you'll be looking at your profile information. And that information is demographics. It has some things on the left you can't touch, which is your hire date, who you are, the name, that kind of thing. But on the right, it'll have your address, your email address, and your phone number. It will not let you proceed without you putting some type of contact information in for phone number, because we have so many phone numbers out there that don't exist anymore, and people just don't think to update it. So it will ask you to update that before you move forward. You can update your address right there too. And so then you would edit the information, update it, save it, and move on. Like I said, when you are in the open enrollment wizard process, you're going to be shopping for your benefits. So anything in there that is highlighted in, right now, the way we see it is highlighted in orange, and it says shop plans. So if you go in and you see that shop plans, you need to do something with that plan. So you'll click on it. You can compare your plans there. It'll tell you the difference between the cost. You can go in and say, oh, I want this plan, turn around and say, no, I want this plan. So you can shop, compare. There's little places to check up underneath the plans to compare one plan to the other, or to compare all three plans. There is a details tab that you can click on, more information. It's going to open up the plan, just like we had shown you here, the differences between the two. It'll give you more information about each plan. So you'll look at that and decide what you want to do. Again, when you're on that first page, what you also need to do is decide which dependents you want on that plan. So if you have dependents, it's going to say family covered. Yourself is going to be the first one, and then it'll say, whoever your spouse is and your children. Each plan you can go into family covered and edit that to uncheck the person you don't want in the plan or check the person that is in the plan. And you can add dependents and delete dependents, okay? So make sure you're looking at that for every plan when you go in. So once you find what you want, you're going to update your cart, and then you're going to see the amount change at the top right of the screen, and it shows you per pay period how much you would be spending. Also, if you go in, you will, some plans you will need to accept or decline the plan, and when you go in, to any of the plans and in the system, before you can log out, it's going to ask you for beneficiaries. That's another thing we were not able to put in the EFIN system that we have right now, and then this system will allow you to put them in. When you click on beneficiaries, it's going to ask you to name your beneficiaries for each of your life plans. Excuse me. And the beneficiary, you can say choose existing beneficiary or choose existing dependent. So if I wanted to add my spouse is already in there as my dependent, so it populates that information for me. The allocation has to equal 100%. So you can have more than one beneficiary, but it has to equal 100%. And it won't move forward until it does. So 50-50, 25-25, 20, whatever, but it has to equal 100%. The other thing you do in beneficiaries is you can list a secondary or contingent beneficiary. So you can, if you want to, put those there. The contingent or secondary has to also equal 100%. And the contingent means if your primary is not alive, then it would go to the contingent. That's how that works. But you will have to populate that as you go through the system. Once you have done all of this, it's going to ask you to review and review and check out. So all of your benefits are going to be listed, and you'll be able to look at them. If that looks good, you'll hit review, and you'll hit review again and check out. You're not through unless you hit checkout. That's what I'm trying to get through. So the review and checkout is not the last step. The checkout will be last step, okay? And then it'll take you to your confirmation screen. And on the confirmation screen, you can email that confirmation to yourself if you have an email at the front on the demographics. And then also you could print it if you wanted to from that confirmation screen. So we will be sending out more information about PlanSource and how to access that. PlanSource also has a call center that will be set up, and the call center will be able to access 6 to 6 Eastern Standard Time. The call center is available for all employees. If you're at home and you're trying to do this and you run into some problems, then you call the call center and they'll be able to help you. The call center is going to help with a lot of different things, but mainly the plan source process, for right now. And then if you need us, of course, we're here. The benefits, the best way to get us is benefits@myescambia.com. That way we all get the email, and then we all decide which emails we'll already know which emails we're going to be responding to. And so we'll respond back to you, and if you have any questions, make sure that you send it to that email. You can call us too, but it's just better if we get it, all three of us, and we'll work together on it. Any questions for me? Yes. I'm sorry? Oh, okay. Yes. The question. Go ahead.
You stated that this would not be available for qualifying events until January.
Correct.
You still see someone in the office for qualifying events.
Yeah. The question was, this system will not be available until January for qualifying events, and the answer is yes. And right now, between now and January, if you have a qualifying event, you need to contact us, and there's paperwork to fill out, and we'll make that change, and we notify payroll if your election changes or coverage level changes. So all of that's going to stay just like it is now until we get to January, and then the program itself, Plan Source, will be doing that. Yes, ma'am, Sammy. It is in the testing process. Our team is working with that. We have a call today right after this meeting, and so the data is loaded, and so once we sign off on everything, there's a few errors here and there that we're fixing, but once we sign off on everything, the projected date to open it is October 28th. October 28th is what we are planning. If we need to move it back a day or two, we might have to do that. Remember, the deadline is November 15th. I think I mentioned that at the very beginning for changes. So you still have a couple of weeks to go in the system. And again, you're not limited to just doing it at work, on work PCs. You can do it anywhere. Well, that's a good question. We hope to open it on October the 28th. The way I understand it, it's going to be, I forgot exactly what they said, but yeah, it's going to be kind of universal at first, and then like the last four of your social, and then you will be able to go in and do a username, set that up. Yeah, and password. I mean, the username will be set, but the password you'll be able to do. And we're going to send that out through email to everyone as soon as we get to that point. Any more questions? Okay, we appreciate you coming. You have some, John?
I just want to reiterate what Kenny was saying is what we're trying to get everybody to do is become a little bit more ownership on your plans, be more educated on the stuff here. One of the things I'm always worried about is when you walk out the door, when you retire, what's going to happen? Because every one of us is going to have to understand what we've spent years trying to figure out. And one of the things I can validate with Kenny also is kind of that discount on drugs and stuff like that. I was in a similar situation this year. I'm retired military, I'm Medicare eligible, and I decided not to go on Medicare Part B, and that means I can't use the TRICARE system. I went and got all my maintenance meds done. It was going to be a whopping about, not as much as about $300, but because of the pharmacy at Publix, which in the case there, they saved me about $150. So what we're trying to say is ask questions. Ask questions. It doesn't matter, pharmacy, hospital, or whatever. Everyone has a different price. Everyone has a different price, so you have to add that. Oh yeah, that's the last one. We do, one of the reasons why we don't hand the handouts while here, because everybody keep a tendency to have to look at them while we're talking. So the handouts are in the back for you folks if you want to add that. This recording will be available probably within the next day or so on our webpage, so that's availability too. So if you don't have any more other questions, yes ma'am. Yeah, right in the back. That's what I'm saying. It's right in the back. We just didn't want to do it in the beginning because we have a tendency to lose people at that point in time. Any other questions? Thank you, folks. We'll see you next year, and hopefully this will all go smooth for all of us. Take care.